Hi, and welcome back to Rewriting Real Estate. Today's guest is Jay Connor. He's a real estate investor, a private money expert, the author of Where to Get Money Now. Jay has actually rehabbed over 500 houses and is known nationwide for teaching investors and agents how to fund deals without relying on traditional banks. He's helped thousands of entrepreneurs raise millions of private capital, and he's truly rewriting what's possible when it comes to funding real estate the unconventional way. So let's get started with Jay. A little bit more about kind of the stuff that you're into. I know that your alignment with real estate non-traditionals kind of is perfect for this show. So let's kind of start at the very beginning. What got you into real estate and kind of who were you before real estate?
Sure, Kimberly. Well, first of all, thank you so much for inviting me to come along and talk about what I'm so passionate about, that being private money and private lending. This is the number one strategy that's had the biggest effect and impact on mine and my wife, Carol Joy's real estate investing business. The first 6 years that we started in investing in real estate, primarily single family houses, all the way back in 2003, the first 6 years, the only thing that I knew to do was to rely on the local bank and mortgage companies for the funding of our deals. But everything changed. Everything changed in January of 2009, and I'll share that story. But how did I get
Sure.
into real estate? Well, I was actually raised in real estate. My father, Wallace Connor, who is now 92 years old and still doing a
Oh,
brand new home development, a brand new home build right now. He was in the mobile home business, manufactured housing for decades. And so I grew up around helping people that needed help with affordable housing. Well, unfortunately, that entire industry, the financing went away in the early 2000s. So I knew if I ever got out of mobile homes, manufactured housing, I wanted to get into single family houses. So that's when we started in 2003. And again, the only thing I knew to do was rely on local banks and traditional funding for my deals. But then in January of 2009, as I said, everything changed. I called up my banker. I had a couple of houses under contract to purchase. And I learned that my line of credit had been closed with no
oh
notice
no.
to me whatsoever. I mean, it was gone. And I said to my banker, I said, what in the world are you telling me? My line of credit's closed. And he said, Jay, don't you know there's a global financial crisis going on right now? And I said, no, but you just gave me a financial crisis, you know? And so I hung up the phone, Kimberly, and I thought to myself, and I sat here at my desk and I asked myself a very important question. And the question I asked myself was, I said, Jay, who do you know, not how, but who? Who do you know that can help fix your problem? And these people running around saying every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem. Now the problem became an opportunity, right? But at that moment, it was a problem. And when I asked myself that question, Kimberly, I immediately thought of a dear friend, Jeff Blankenship. He was living in Greensboro, North Carolina at the time. I'm here in Eastern North Carolina. And he was investing in single family houses. And I thought to myself, Jeff might have an answer to my problem. So I called him up. I told him what had just happened. I'd cut off from the bank. And Jeff says, well, have you ever heard of private lending? I said, no. He says, have you ever heard of self-directed IRAs where individuals, just regular people like us, can move their retirement account to a self-directed IRA company and then loan that money out to us for our real estate deals. And the money we pay them is either interest-free is either tax-free or tax-deferred. And I said, Jeff, I don't have a clue what you're talking about. I said, what's private money? He says, well, I'm not really sure, but there's this gentleman down in Jacksonville, Florida, by the name of Ron LeGrand that can tell us all about private money and self-directed IRAs. I said, okay, that sounds cool. I said, well, who's Ron LeGrand? He says, well, I'm not sure, but he says we can get a lot of private money really, really fast. So February 2009, I went to my very first real estate investing conference. I learned about private money, and Kimberly, oh my lands, what did I do? I came back home and I put my opportunity together. And what did I do? I took on the mindset of being a teacher. I put on my private money teacher hat. I, I'm a teacher. So I went about just teaching people in my own network, people I go to church with, people in my, in my social circle, my professional circle. And in less than 90 days, I was able to raise over $2 million in new
Wow.
funding for my real estate deals. And a big part of that secret was just sharing the opportunity without having a deal attached to it. You
Right.
know, desperation has a smell to it. And,
True.
Kimberly, I'm gonna take a little risk here. I'm gonna take a little risk. And I'm gonna ask you, have you ever heard the guru stand on stage and say, "Oh, just get the deal under contract, the money will show up"? I don't know if
Right.
you've ever heard that or not. That's the most stupid thing I ever heard in my life. I mean, it's like, you get a deal under contract. I mean, it's like a drone going to fly over your front door and drop a bag of
Drop the
money.
money.
So,
It's
so
true.
it just seems much more common sense to me to get the money lined up. I mean, think about it. How much more confident, how many more offers are you going to make when you know exactly where the money's coming from and you can close in 7 days? All my offers, I actually offer that I can close in 7 days. So that was the beginning of this journey all the way back in 2009. And since that time, I've never missed out on a deal for not having the money.
Wow. So is it just kind of bring it back down to like kindergarten level for me? So you get the money from private people, provide kind of a fund, and then that's your cash for a deal? Or am
Yeah.
I getting that wrong?
So no, so there's different kinds of ways to use private money. If I was doing large projects like multifamily, self-storage, commercial, that type of thing, then I would establish a fund for the private lenders to invest their money in that fund. But in this world of single family houses, and single family houses is primarily what we do, in
Right.
this world of single family houses, everything we do is what's called one-offs. So what's a one-off? A one-off means it's everything we do is asset-backed debt. Asset-backed debt, which means we're
What's
not
that mean?
borrowing. Yeah, what that means is we're not borrowing unsecured funds. We have a private lender, that's an individual just like you or me, that's using their investment capital and or their retirement funds to loan out to us real estate investors. So they get a promissory note, they get a mortgage or deed of trust, depending on the state you're in, that collateralizes that promissory note. So think of the private lender as the bank. So the
Okay.
private lender doesn't own the property. The private lender is the lender. They're the bank. And we're going to give them the same protection that a bank gets. Promissory note, mortgage, or deed of trust. We're going to name them on the insurance policy as the mortgagee, which means if there's a claim filed against that property, then the insurance company makes the check payable to the private lender and to you, the real estate investor, the company. We're going to name them on the title policy as an additional insured. So the private lender is getting all the same protections. So their legal recourse is foreclosure. If we don't pay the private lender, they get the property, which means they actually earn more money because we're not going to borrow more than 75% of the after repaired value. I didn't say of the purchase price. We always bring home a big check when we buy the property because we buy these properties at such a huge discount. But these private lenders are getting the same protection as the bank.
Okay. And so then you, as the investor slash homeowner, pay the private investor like a mortgage payment?
Correct.
Or,
Yep, that's what it
okay.
is. It's
Okay.
a mortgage payment. A lot of times you can just accrue the interest. So if you're doing a flip, If you're flipping a property, then you can accrue the interest. And then when you sell the property on the back end of the flip, then the private lender gets paid off all of their principal loan amount and the accrued interest that they earned.
Okay. Okay. And then how do you find the private lenders?
There's three categories of private lenders. There's your own network, your own warm market, people in your cell phone. Then there's what you call, or what I call, your expanded market, because if you want to scale your business, sooner or later, you're going to run out of your own network. So then there's your expanded warm market, and I teach how to grow that very quickly. And then the third category are existing private lenders. So in that first category, that's where my first 47 private lenders came from, was my
So
own
people
connection.
could pool their money together for one property?
Sure.
Or is it,
Yeah, you
okay.
can. Yeah, you can have more than one private lender that is funding a particular property.
Okay. And do you have to run it by these private lenders? This is what the property I'm looking for at. And do they have to have it, or do they get to, or are they a part of that decision? Or they just say, we're trusting that you're going to make the right decision on which property to purchase?
That's a great question. So I never pitch deals.
Right.
Pitch deals. What I do is I first teach up front the underwriting criteria. So what's the most we're going to borrow on a property? 75% of the after repaired value. And so they know how the whole program works. So then I call them up with a deal for them to fund. And I call that, Kimberly, the good news phone call. Good news phone call.
Like we found it.
Yep. So I call them up. Let's say you're one of my private lenders, Kimberly. I call you up. I said, I got great news. I can now put your $150,000 to work and invest it. I've got a house in Newport, North Carolina with an after repaired value of $200,000. The funding matches up to what you've got, $150,000. You see, you already know I'm not going to borrow more than 75% of the after repaired value. Funding is going to be, or closing is going to be next Friday. So you need to wire your funds to my real estate attorney's trust account next Thursday. And I have the attorney email you the wiring instructions. So the reason in that example that you are excited to fund my real estate deal is because, number one, let's say you've got retirement funds that were not working for you. And let's say you move those funds over to a self-directed IRA company that I recommended. Well, you trusted me to do that. You've already moved the money over. You know I'm not going to borrow more than 75% of the after repaired value. I gave you that information. And you're not making any money until I put your money to work. So, one of the big mistakes I see real estate investors that start out raising capital is they talk too much. It's like they're selling or they're
I think
pitching.
all realtors have that problem.
Or they're chasing. And no, put all that aside. All you're doing is serving and fulfilling what you promised you would do.
Okay, so let's go back to that example. So 200,000, it's worth 200 after repairs. I loan you or I'm the private lender at 150. What happens next? Where does it bring me value next, or how does that typically work out?
Sure. So in that example, I might be buying that property for only $100,000.
Okay.
And maybe there's $30,000 or $35,000 in renovations. So when I close on that property, I'm bringing home a $50,000 check called excess cash to close, minus, closing costs. So I'm going to take 30 or 35,000 of that 50,000 excess and renovate the property. And then I get it renovated. Then I'm going to list it in the multiple listing service for 200,000. We're going to sell it. And all during that time, your loan of 150,000 is accruing interest. So I've been paying all my private lenders 8% ever since 2009, and they love it. And so your investment of 150,000 is earning 8%. When that house sells and cashes out, then your 150,000 is paid off along with any unpaid accrued interest. I've got some private lenders that we actually pay monthly.
Okay.
because they are needing that for additional supplemental income. So we'll pay them monthly if they need the money. And
The
when we
percent
cash
you
out
mean?
and sell that property, any unpaid accrued interest, they'll get that at the closing.
Okay. So the lender is not going to gain value from the sale of the house if you're 50 more than what they loan. You get that benefit, but then the lender gets some money back plus interest and then can reinvest that into the next project.
Correct. Yeah, the
Okay.
private lender, here's the easy way to think about it. The way the private lender works is it's instead of putting their money in a local certificate of deposit at the
Hmm.
local bank and earning 3%, they're earning 8%.
I like that. That's very interesting. And then you teach it now, and I see that you've written a book and you do live events. How's that been working?
Yes, that's my passion is
I bet. I can
teaching.
tell.
Yeah, and is teaching and inspiring other real estate investors how to raise private money. And what I'd love to do for your audience, Kimberly, is give my book away for free. It's a national bestseller and it's called Where to Get the Money Now. And it's $20 on Amazon, but don't spend $20 on Amazon. It's free. I'll mail it if your audience will just cover shipping and handling. But it's where to get
That's
the money
awesome.
now, how and where to get money for your real estate deals without relying on traditional or hard money lenders. And I'll autograph the book. I'll ship it out three
I
day
love it.
express. And
Thank
your
you.
listeners can pick it up at J Connor. And by the way, I'm an ER, not an OR. So your listeners can pick it up at J Connor, JayConner.com/book,
And I'll
jconnor.com
put that
slash
in the
book.
show notes too.
Awesome. And I'll also include 2 tickets to my live event, which is called the Private Money Conference. I do it 3 times a year and it's $3,000 value, but I'll include the tickets in the book as well.
Awesome. That's amazing gift. I love it. And do you feel that most real estate agents should have private money lending kind of in their portfolios of opportunities for their clients, or is it more for themselves, or both?
Yeah, I believe that real estate agents, realtors should know about private money if they are working with investors.
Got it.
So if you are a realtor and you're listening to this show or a real estate agent and you work with investors, then I'd probably order 10 of these books and give these books out to your clients that are investors so they got plenty of funding in order to make offers on the properties that you're helping them with.
And it also could be a good avenue for someone that is a real estate agent and wants to start maybe making investment or purchasing investment properties, but maybe they don't have the equity. They could provide that opportunity for themselves this way too, correct?
Absolutely. Absolutely.
Do you use this at all for like long-term investment properties, like long-term rental investment properties, or is it typically more of a flip?
Well, it's all the above. And here's what's
Okay.
interesting. In today's market, Kimberly, I just checked a couple of weeks ago. In today's market, here at the local bank right down the street from my office, they're charging for commercial for if you wanted to invest and be a landlord and get a 30-year fixed rate on a single family house. Just a couple of weeks ago, it was 8.3% plus points. But I'm
Wow.
paying my private lenders 8%. So actually, I'm paying my private lenders less than the long-term interest rate for commercial. So I've sold a lot of houses on rent to own, lease purchase, if you will, and paying 8%. So as long as I can get a positive cash flow on the rent coming in on those rent to own sales, then it makes sense. So yes, it can be for flips, it can be for long term as well.
I love that. That's just really opening my mind to things I didn't know about. And I'm excited to order your book myself to read it.
Sure, Kimberly.
Now, I do love to kind of end on this final question I ask everybody. So I'm curious what you would say if you hadn't moved next week to a brand new town, brand new city in a state you've never lived in, a place you've never lived in, what's the first thing you do to scale as quickly as possible right out of the gate? You'd still have your knowledge and your experience, but you have no sphere, you have no network, you have nothing other than what's up here.
So are you asking if I moved to a new city, new town, but I wanted to continue doing what I'm doing in real estate? What would I do?
Just, it doesn't even have to be real estate, to be honest with you. It's just what would you start day one to scale as quickly as possible if you're starting over again?
Oh, absolutely. Well, I tell you what I'd do. Moving to a city where I didn't know anybody, I would join Business Networking International.
Yes.
BNI is what I would join. And that's one of the quickest ways to grow your network. I joined BNI many, many, many years ago here in our small town. And that's a very, very quick way to scale your business, a very, very quick way to make new relationships. And, Business Networking International is different from civic groups such as the Rotary Club. Rotary Club is fantastic, but BNI is established for the primary purpose of giving each of its members leads, right? New leads. And so if you want to grow your network very, very quickly, I highly recommend Business Networking International.
And that's a great piece of advice. And I know that that's old school, but I think old school is what works the best, and people forget about that sometimes, I love it.
Absolutely.
Yes. Well, Jay, thank you so much for your time. I really appreciate it, and can't wait to share this with the world. And I'm hoping people will take advantage of your opportunity to get the book, read the book, and potentially go to one of your live events. Are they typically 2 or 3 days, or how's that typically work?
3 days. They're always Wednesday, Thursday, and Friday, typically February, June, and October here in Eastern North Carolina.
Okay. Where's your biggest or closest big airport?
So we have no close big airports. So to get here to Eastern North Carolina, you'll need to go either through Charlotte or Atlanta, and then they can fly into either New Bern, North Carolina, Jacksonville, North Carolina, or Wilmington, North Carolina, and that'll get you close here to the East Coast.
Perfect. Well, Jay, thank you so much. I really am excited to kind of do a little personal deep dive onto this information. It's very valuable.
Thank you so much for having me, Kimberly.
All right. Yeah. Okay. I look forward to staying in touch.
You got it.
Thanks for listening to Rewriting Real Estate. If today's episode challenged your thinking or gave you a strategy worth trying, share it. The right move at the right time can change everything. Subscribe and listen in next week for more insight, more momentum, and more ways to grow your business your way.